Today's class, we're going to be going into directional bias in today's class, and it's pretty going to be a long one. So you want to follow through everything that we're going to be doing. So, um, directional bias is basically you understanding, you know, where the market is going, because for you to actually get a good trade, right? You need to first of all get a clear direction of the market. And when our first class, I taught you guys that price makes its movement in three ways. It's an uptrend or a downtrend or a ranging market. That was what I taught you guys, right? And I said we only pay attention to the either a downtrend or an uptrend uh price movement, right? That's why I taught you guys at first. Now, just as you get your market structure for either an uptrend or a downtrend, it's the same thing that you do when you're looking out or you're getting to get a clear direction of the market. But the only difference is that on you getting the direction of the market, for you to get your directional bias, you're mainly going to be using a higher time frame, either a 4 hour time frame or a daily time frame. That's the time frames that I use to get my directional bias of the market. Now, um, just like you're the same way you join, I taught us the concept that we use to join a continuation trend or to take a reversal, right? The same principles that you apply if you want to join a trend or take a reversal, the same principles, the same criteria, the four rules in picking a proper point of interest, all those things is the same thing that you also apply when you are getting or when you're looking for. I've heard you now. You say you can hear. The same thing you also apply when you are getting the direction of the market. Now, like I said, the only difference is that you're staying on a higher time frame. So first off, what I would do is I will go to a higher time frame. Now there are three ways that you can, get your directional bias. One of the first way is, when price is like giving you maybe this move right here, right? So let's just say like this market is on a downtrend, for example. Let's say this market is on a downtrend, and then let's say something like this now happens. Now, what do we call this? What do we call this? This market was on a downtrend, right? The downtrend pattern, lower lows, lower
Yeah,
highs,
market
lower lows.
structure shifts.
All right, good. This is a market structure shift, right? Now, if I see something like this on a higher time frame, either a 4 hour time frame or a daily time frame, this is a market structure shift on a higher time frame. So this is literally a reversal, which means that we have to start looking for buy opportunities to take out this trend line liquidity that is around this area. So now we have gotten what a market structure shift to the upside, and we have gotten a directional bias, which means that this price should now start looking bullish. The same principles you also apply to pick your proper point of interest. The same thing you also do here. So now that the market has given you a market structure shift, the same thing you wait for what? A pullback reversal. So your reversal, your inducement liquidity, you also wait for it. Now you have to also be, smart about marking out your
Sorry, please. Sorry. Please,
I've
before
not
we
finished though. You can't start asking me questions now until
no,
I
like I feel like no, hold on, please. because I don't want to get confused. If I feel like before you start this topic, you were meant to explain liquidity and you have not finished that part
This is the
because
process of liquidity that we're catching. Can you wait till the class is over? Then any part that you don't understand, you ask. Because I'm literally going to talk about all those things in this class, and we're literally just started. So, the same way you wait for, the same way you get your structure shift and also your liquidity is the same thing. Now, for you to get a proper point of a proper liquidity, this is how your inducement should be. So what I do is that after my market structure shift or double break of structure or multiple break of structure, I wait for a pullback. Now that pullback should go back to take out the body of the candle that caused that market structure shift or double break of structure. What that means is that, for example, can this thing exit here? For example, if this candle here is the one that caused this market structure shift, this candle here, and then this candle closed here, right? This candle closed at this point, and then it gave me a pullback. Now, for this, if the pullback ended here, for this place to be a valid liquidity, it has to take out, this pullback has to take out the candle body that caused that market structure shift or multiple break of structure. Just give me a minute. All right. So if let's say for example, so that is how you get a proper liquidity. Now, if for example, maybe 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 after the pullback happened, it came here, maybe it tried to break the body, it didn't succeed, and then maybe it tried again, it didn't succeed, it still stopped at the equal high of the candle that caused the body closure of the candle that caused the multiple break of structure or market structure shift. I've not confirmed an inducement yet until a candle, if it is the third candle that now eventually takes it out, this is where I will now mark as my uh this is where I'll now mark as my inducement here. This is where I'll now mark as my inducement. So that's how you mark a proper inducement. Are you getting it? We'll give an example in the chat, right? Now, because this inducement now has now mitigated this POI here. Remember, this is a breaker block POI, but because our inducement has already mitigated it, which means it has tapped into that block, that breaker block, we can no longer use that POS. But we have another block here. So what we'll now do is that we are still applying the same rules in picking a proper point of interest. But like I said, the only difference is that now we're doing everything on a higher time frame. What we'll now do is since this is our inducement here, we'll now wait for what price to come back into this zone. Now we will not just enter, right? We'll not just enter, but we'll mark this place as a POI. Now, when we'll now enter a trade here is when market gives us a confirmation at this zone here. Now, that confirmation is going to now be on a lower time frame. It could be a 15 minutes time frame, it could be a 1 hour time frame, 30 minutes, any lower time frame that is clear. Most of the times I use 15 minutes time frame, right? Now, that confirmation is also what a market structure shift concept. Take note, that confirmation that you are looking for at your POI, at your higher time frame POI, that confirmation must also be a market structure shift. If you do not see, if that is your confirmation, if you do not see a market structure shift, then that POI is not valid, or I will not use that POI. I will not enter from that zone. Now, this is still what? This is still a higher time frame. Let's mark this as 4 hours. Let's say this is a 4 hour time frame, right? All the structure here is a 4 hour time frame. Now, like I said, our confirmation is going to come in a 50 in a smaller time frame, which could be a 15 minutes time frame. Now, on the 15 minutes time frame, you can see something like this. On the 15 minutes time frame, you can see something like this. Maybe as price is approaching towards that zone that you marked, right? This is what? This is a 15 minutes time frame. Let's say this is a 15 minutes time frame. So what's this literally? This is like this this movement, right? This movement on the higher time frame. It could be a single candle, it could be maybe small candles, coming to touch here. But on 15 minutes time frame, you might see it as something like this, as a downtrend pattern, right? And then giving you the same market structure shifts uh pattern, right? And then if it also does the same thing, it gives you your inducement, the same principle, everything applied. Your inducements, for it to be valid, it should literally go and take out the candle body closure of the candle that caused the market structure shift. And then you still apply your four rules in picking a proper point of interest. If your inducement had mitigated this breaker block, good and fine, you only have this other block to use here. And then you enter your what? Your buy. Remember, your confirmation is on a lower time frame, right? So you getting a confirmation will give you an opportunity to have a a bigger risk to reward, and a small risk and a big and a better risk reward ratio, right? So my stop loss will just be below the candle, and then my entry from the breaker block body or other block, depending on how it is. Now, my nearest target, right? So that's how this for example here, right? We've gotten what? A buy structure here, which on the 15 minutes time frame, it is something like this, right? So my my nearest drawdown on liquidity, actually don't know why this is so tiny. So my nearest drawdown on liquidity for this trade will be this liquidity here, right? Now, mind you, these two are the same. These two are the same, but this is how it will look on a 4 hour time frame, and this is how it will look on a 50 minutes time frame. Now, my nearest target on this trade will be what? This nearest drawdown on liquidity. Although my overall target can be this liquidity here, because it is expected that price should be bullish until it takes out this trend line liquidity here, right? But that would take a very long time, could take weeks or maybe months, right? But just know that the market is going to be in this bullish trend until this liquidity is swept. But for this, my first trade, my nearest drawdown on liquidity is this here. So I'll take my profits here. Then I'll also show you guys how to find multiple entries there along the line. So this is how you get a directional bias. This is the first way. Now, let me give you guys an example in the chart. Now, if you go to this is currently GBP NZD, right? If you go to a weekly time frame, for example, on GBP NZD. Now, on the weekly time frame, right? You can see that the price was bullish, right? You can see the higher highs, higher lows, higher highs. The price was bullish on the weekly time frame. And then this was a last high that took out this last low, causing what? A market structure shift, right? And then you can see this week here, this candle, after this market structure shift, this is the body closure of the candle that caused that market structure shift. This is the body closure right here. And then after that proceeded what the next candle, which is supposed to be our inducement, and it actually was a proper inducement because you see here, it pulled back a little, right? And then it still came out and it still came down to take out to close below the body closure of the candle, right? So this is a valid inducement. Wait, hold on. I think I saw something. Right. So now we have what? Now, because this market structure shift here this inducement here has mitigated this breaker block here. We cannot use this breaker block as an entry. So our focus is now going to be on this breaker block or this whole area here. So this is our main POI. Now, as price was approaching there, you can see on a weekly time frame, this is a weekly time frame. So you're just going to see big, big candles, right? But then if you come to the daily time frame. So next thing now for me is what? To look for confirmation at that zone that I marked, right? That zone that I marked, that POI zone that I marked on my weekly time frame. I'm coming. This is actually one of the few times I'm using a weekly time frame to get directional bias, but it is definitely a higher time frame. Sometimes it could be 4 hour daily, whichever one is clear. But on this GBP NZD, it was much more clearer to understand starting from the weekly time frame. So now on the weekly time frame, on the daily time frame now, I'm coming to get what my confirmation since I found my I'm trying to get my bias on the weekly time frame. I'm going to have to use a lower time frame, which in this case it could be a daily time frame or a 4 hour time frame, right? Now, on the daily time frame, you can also see what you can see the trend like pattern. You can see the market was giving us a bullish structure to that zone, just like what I showed you guys here. Now, you remember on this example I gave you guys, on a 4 hour time frame, you can just see it as just big, big candles. But if you scale down or if you niche down to a lower time frame, you see the structure giving you proper. So that's exactly what's happening here. On the daily time frame, the structure was now proper, right? And now the same concept, we are still going to look for a market structure shift at that zone that we're expecting our confirmation. So you can see here a clear market structure shift here, right? You can see the last high here, last low, last high, last low, last high, last low, and then it gave us a last high. That last high proceeded to take out the last low and also took this out. So that's what double market structure shift, right? And then same thing, inducement. Now, you can see here, this is where I will mark as my inducement, right? This is where I'll mark as my inducement, right? The next candle that's after the market structure shifts, right? This is the body closure. The next candle that proceeded took the body closure down, but it had other candles, right? But before getting to the POI, it pulled down like completely. So that's why I'm marking here. So whatever candle is the longest, that's what you mark as your inducement before getting to your POI. So this was like the longest one before it eventually came to our POI, right? But if something like this happened, maybe if after this week, maybe it did not do all this move down here, I wouldn't have picked this as my inducement. I'd have picked this. If this candle here was actually going to get to my POI area, because my POI is literally starting from this candle here to this. So this is literally my entry point. This is literally my entry point for this trade right here. But you can see this week right here did not tap. So this is still going to count as an inducement, right? It didn't tap. It came down again and finally tapped. That is why this is still counting as an inducement for me. But if this week was going to tap, right, this would have been my inducement. That's why I say whichever one is the longest before it like finally gets to your entry point, you mark it as your inducement, right? I hope that's clear. So you can see after price gave us that structure shift, inducement, This inducement has mitigated this breaker block here. So I have this other block here as my POI, and price came to that other block and triggered, right? It triggered. Now, what I also applied on this particular trade again is that because this is also a higher time frame, the daily time frame is also a very much higher time frame, right? And it also gave us a like normal, this alone is a directional bias on its own because this is a daily time frame. It gave us a structure shift, and then there's liquidity to clear here, trend line liquidity to clear here. So this alone is a full trade bias or a full directional bias on its own. So I didn't just enter this trade from here. I would have, but it is a daily time frame, and it also gave us a whole good directional bias. So I think I still niche down this trade. I still niche down to 4 hour or 1 hour. I think it was 1 hour to still get a market structure shift still around this zone again. I still had to get a market structure shift here because this was a daily time frame. And on this daily time frame, it was like a whole different trade. I forgot about this whole move here, this whole market structure shift here, right? And I just focused on this one here, right? And I still had to still get a confirmation around this zone. And I think it gave me a confirmation on 1 hour time frame. So so let me see. Okay, I think this was it right here. So this was literally it right here. Did I use 1 hour or 4 hour? So let me try to see 4 hour. So it's important that you know how to switch or know how to like use time frames because some people even use 5 minutes time frame to get a trade. So you just need to just know how to use time frames and know whichever one is clear to you. So I think I used 4 hours for that confirmation again, right? So this was a market structure shift here, right? This was a market structure shift here. And I think, yeah, this was where I marked as my inducement. This is where I marked as my inducement. And this was my, where did I enter this trade from? Okay, yeah, this was my breaker block entry. This is my breaker block entry here. And I could also mark this as my inducement though, right? I could also mark this, but this was the longest week that didn't still get to my POI. So this is still counted as an inducement, like I told you guys before. And I picked my entry from this breaker block here. This is the breaker block that I picked my entry from here, right? You can see here, it's still on the same line. And my stop loss just above the whole candles and everything. This is literally where my stop loss would have been, but I wanted to keep the risk to reward ratio small. So that's how I got this trade. Now remember, this direction is what bearish. So we're in a bearish market all through that trend line liquidity is cleared out. Now, after it happened, right, you can see it triggered and it was it literally selling. Now, I still got confirmations, right? The same principles that we apply for getting confirmation, you still apply it here. So I think I got my confirmation from 1 hour time frame. Now, when you want to join a trend, after you've gotten your directional bias, um, and you want to join a continuation trend, you can literally use any time frame, whatever time frame is clear to you, 15 minutes, 1 hour, and all of that. Why I use 1 hour for this is because already on the daily time frame, the candles are already so big. So if I want to even use a 15 minutes time frame, it would be so tiny. You can see even 1 hour itself is tiny, not to talk about 15 minutes time frame. So I didn't just want it to get messy. So I just needed a higher time frame where it will suit me more. So After this first entry here, we got this our re-entry. Now, your re-entry is from what? Let's, excuse me. Your entries were from what? Multiple break of structures. So after this entry triggered, what are we going to start marking out for? Multiple break of structures. And I said a multiple break of structure is when you have a break of structure on more than one consecutive zones, either a key level, a key high, or a key low. And since we're in a bearish trend, or we're looking now to sell, we're looking at key lows, right? So first off, we have this key low that was taken out, right? We have this kilo that was taken out. Now, it didn't just take out this one kilo, it took out, it also took out, it also took out this low as well, right? This was the first low, but this is only a single break of structure. So it is when it also took out this low, that's when we now confirm a multiple break of structure, right? And after a multiple break of structure, the next thing, liquidity, inducement liquidity, and which was what? Was this. So this was my inducement liquidity, right? And then I had only one POI left, which was this order block here. Can you guys see the order block? This is an evening star order block. That's why I picked that order block as my entry. It was not mitigated. It followed all the four rules of picking a proper point of interest, and because that entry was a sniper. Now we're still bearish, so all we just keep looking for is more and more and more multiple breaks of structure. Now, after that one, see another kilo again, right? See another kilo. Now, this kilo once this kilo got taken out, we confirmed another multiple break of structure. And this is the candle that caused it, right? You can see the candle here, candle that caused it. And after that candle, you can see your inducement here, right? You can see your inducement liquidity that also proceeded to take out the body closure of that candle that caused the multiple break of structure. So this is my inducements here. Now, looking at the POIs, the possible POIs, I have a breaker block here, right? I have a breaker block here, which is why I used this breaker block as my POI. It followed all the rules, and we got another uh, entry. Now this one, when once it triggered, it sold down. So now we still have another kilo here. We still have another kilo here that has now been taken out, right? Now, um, before that, right? Because this market sold down like massively, I think I did something. I went to, so this is what I introduced to like from my personal learning. I went to I went back to the daily time frame. I went back to the daily time frame to observe this chart. Now, when this uh I'm trying to break it down. Okay, yeah. So now this is this is the last drop before like the market gave us an inducement liquidity. So what that means is this. When the market gave us a market structure shift and sold, right, this was where the last drop was, right, before it pulled back to give us a liquidity. No, mind you, wait, wait, wait. Um, sorry, this is it. So what I'm trying to show you guys is that this is the nearest drawdown on liquidity for this particular setup, because after it gave us this liquidity, it dropped, right? It dropped, and then this was the drop before it came to trigger our entry. So whatever area, whatever level that it is, that's where our nearest drawdown liquidity is. What that means is that this is supposed to be our first take profit. This zone right here is supposed to be our first take profit, because before price got to our entry, this was the last point that it was at before it started making that move to come to our entry. So this is supposed to be nearest drawdown on liquidity. So the market sold, and eventually got to this nearest drawdown on liquidity, right? Now, after it happens, you take a pause, and what will you start doing? You start marking out what your multiple breaks of structure that has occurred so far in that particular space. And what do you do? What is the purpose of multiple break of structure? Multiple break of structure is to get a confirmation, right? To continue, or is the concept we use to continue in a particular trend. We still have a trend line liquidity here, right? So we're still looking to still sell this particular pair, right? And now we have what? A multiple break of structure from when our original entry triggered, right? Now, after that multiple break of structure occurred, we had our inducement, which is where I marked here. And now this inducement, for it to be valid, like I said, it has to what? Take out the body closure of that candle that caused the multiple break of structure or market structure shift, whichever case. So that's why I marked this as my inducement. Now it has already mitigated this breaker block. I don't count this as a breaker block because like this is how my breaker block, this is how I mark my own breaker block. A small bullish, a small bearish candle and a bullish candle that engulfs it. That's how I mark my bearish breaker block. But in this case, this is not it. So that's why I didn't mark here. And that's why I marked this breaker block here as my breaker block, right? Now, price what came here and it has what since this is a higher time frame, right? You don't just rush to enter a trade on a higher time frame. You niche down to a lower time frame and get your confirmation. So in as much as I've gotten my multiple week of structure because it is on a higher time frame, which is the second way that you can also get a directional bias. Remember this, the first one I showed you guys was from the normal market structure shift. You can get your directional bias from market structure shift on a higher time frame and also multiple break of structure, which on this case we're on a daily time frame, which is a higher time frame, and we have what? A multiple break of structure here. So this is the second way you can also get your directional bias, and you still apply the same principles, the same rules, your inducements, and then marking your POI and waiting for price to get there and give you a confirmation, which, like I said, is still a market structure shift on a lower time frame. So, I want to pause this class and start a new class like ASAP. So once I just text you your your DM to rejoin, just make sure that you rejoin. All right. So about to end this first phase here so that you can have part one and part two. Because this, like I said, is actually a long one. So this is going to be part one. So I'm going to stop this, save it, and then we'll start the next one ASAP.